morning and welcome to the Breakfast Club, my friends. My name is Darren Hancock and this is the Breakfast Club. Welcome to ThetaWaveTrader, all you new folks out there. Appreciate your time. Let's see if we can't give you guys some skookum trades here. Let's have a look at what we're dealing with. So yesterday in the pre-market analysis that we gave, I was looking for a return back up into this level here. You know, at least this imbalance. If we could just get a retrace back into here and look for continuation on the downside. The second part was if we did gap down, we want to see if we can come back, use this lowest wick here as support, and in fact it is actually gap down, came back, filled the gap, one side delivery, so it's not completely filled in yet. So you've got a price imbalance here for sure. So we only have one side delivery back to this, and then we gap lower. Oh, we started going lower. So if we look at the open from, let's look at the hourly here. Because there were some really interesting things that we had. So here's our open on Sunday. Come back into the gap. Creates a gap, comes back in, fills it once on the buy side, and we continue down. So we've got no real reversal going on here yet. In the hourly, go to the 15-minute. We've got lots of little switching ups here. So inside this range, we have I'll show you this, how we use this wick here to go lower. I'll show you that in a minute. So we have a reversal here. Body trades above it. Come back. I think we just literally open on it, come back, tap it, extend the range, or extend the end of the range, or pull the fib tool. You'll see that you're over 50%, 62% of that range. Changes up. Drops back through that range. So now you know you're on the wrong side of it, and you got to wait for it to return back into it. Fails to go lower. Finally breaks up above this reversal again. Comes back inside it, gives it a little tap, runs up to the mean threshold of this candle. We get another reversal. Body closes below it, you come back up inside it. Continue down inside this small range to the bottom of the discount, box to box trading in here. No bodies break this level now. So now we want to see if this level gets taken on the upside. It does. You come back inside, all the way back down to the discount box, run up, extend the range. So this is the stuff that we're talking about on Sunday in terms of all the different ways that you can get into the market there. Uh, 5-minute chart. It's got a lot more cleaner setups in here. They're albeit small. You do have, and this may be why Michael likes the 5-minute chart. This one actually, if you look at the high on this candle, it's 305.75. The close on this candle, 304.50. So you close below that. Next one opens. The high, 303.75. Come lower. Wait for your first reversal. Nothing. Nothing. Small one here. Reverse above it. Come back into it. You go long. Back up into a premium array. Little tiny guy sitting right in here. You trade right through it. And freeze on the high. You don't actually extend the range. We have a change in direction. Look at this. You trade, change in direction here. You trade below it. You come back up inside it. Extend the range back into 50%. You got to reverse. Trade through it here. You're on the wrong side of it. So when you go, oh, I'm on the wrong side. Get back in sync. Take your trade off. Get back in sync. Come back down to the discount box down here that we were looking for. That little tiny one. Hits it again. Reverses. Trade below, back and forth, wait for market structure shift, We got a little structure break right here. You don't get a chance to get in on that or that one. We continue to march through. So use the highest one, the last one that it takes out, which is this one right here, comes back inside it all the way, and then continues to extend the range. Reverse, trades back into, no, that's not a reversal. Yes, it is. There's a little tiny imbalance in there. Doesn't get it though. You got a couple of imbalances along here. When you finally trade through them with this candle and break structure, come back up inside that and extend lower. CAN model 1 entry. Look at that. All the way down to a CAN model 2. And it just goes into some chop. Reversal this morning at 7 o'clock. There's your reversal, takes out old lows, trades above it, comes back inside it perfectly, extends up, and we've already hit that premium breaker. Last stop close candles meet threshold. You got relative equal highs above you, so I still want to see that go higher. I just want to see these highs get taken here, and then I will start putting in all these 6 a.m. candles. 6 a.m. Oh no, we want to go to. Let's put all our candles in place here. I hope you guys had a good weekend this weekend. I had fun. Kamau and I had some fun trading Bitcoin this weekend. And I certainly enjoyed the show yesterday. It was fun to bounce some ideas off people. And show them some of these awesome little trade setups. Just set up your charts now. Go back through all of your day and put in all your key levels. And we got Sundays, Monday, 4 o'clock. I'm not sure if I find this 4 o'clock one. All that I'll leave it for now and see. I'm going to do a little research on it this week, and then we're going to go back to I probably think he would say this one, but we're going to stick with that one. That's the first fair value gap after midnight. And let's mark the open range. It's an immediate rebalance there, so all right. Let's look for all right, so keep those in mind, and then we've got the reversal on its way now. We're looking for these equal highs above us. We're all out of premium array now, so I like the upside. Nice. Okay, so now I'm looking for, see if we can get back into this gap above us again on the day. Let's start trading back into that open gap, new week open gap above us. And then start aiming for my upside objectives. If this holds today, and we start to get back through a close on this little 1949T on a close, then I'm looking for a run back up into this, at least into 19655. And if that continues to march higher, then I'm looking for a nice big busy up here. I'm looking for a premium array back up in 20,000 again. Return into this little box right here. See if we get through this one or use it as support. Look at that. Perfect. Now you want to see that keep marching higher now. You don't want to see it come back down into that. We start getting through this. We know that we've swept these highs here. We start to get back down into this range again. I'm looking way down here. We never got an opportunity to get in on that or this. So I'm looking for a downside. We get below here. All right. Let's say hello to some people here. I got some all right, we got 17 people in the house. Let me finish this little analysis. So I'd like to see it return back into this little box here, and I'll start to go lower. If we come back through that, then again, I'm looking for higher. Right now, if we're just trying to stay in sync with the market, right now I'm looking to go lower. Maybe back inside this range now. We swept these little highs here. Let's look at ES. On the daily, same kind of thing. It swept its lows now. That's the daily. Let's go stick with the hourly right now. I'm just doing hourly analysis on these. You'd have to get above this consolidation here for me to go a little bullish again. We still get around this 5, 5, 6, 8. We got to get higher here. If not, we use this order block to roll over and come back lower. Look for CAM model 1. We've already got a nice little drop down, so this could just continue to roll over and come back down unless we take out this candle here on the upside. I'm still bearish on that. Right to the mean threshold of the candle we're calling for on Sunday. Now I want to see if this supports price and comes back higher, or if we break through that on the downside. Dow, we're looking for Dow to take its lows. Dow's the only one that hasn't taken its lows yet. So oh, this is nice. UNG. Carry on, man. Carry on, my wayward son. Let's go all the way up here to, I do like the premium at 23.22 to 23.82. Copper, if I drop down below that level, nice. Now we've got a little structure break. We come back into this level. Like this one now. We find some support of that rollover. We're coming back down into this range. I'm looking for a return back to the consolidation into a CAM 2 possible down here. I sneaking away here. Day 6 of the Bell's palsy. I'm hoping we're going to get some more improvement along the way here. I still feeling a little bit of I get these little twitches in here, which I think is a good sign. It's like the muscles kind of just saying, hey, look, I'm trying to wake up again. I've got one of those nerve stimulators, you put on your back for back pain and stuff. So I'm going to put a 10 unit on there and just trying to stimulate the nerves constantly. So I'll put these little pads on my face to try and keep the nerve alive, keep it going. So that's upside natural gas right now. This regular natural gas we got here is $4.40. So we did get a little bit of a drop here from that level, took out the lows. So again, you watch here, extends the range. That's just the rule we talked about on the weekend. See how you get that little reversal coming in here, takes the high, then it comes back, trades through it on the downside, extends the range, comes back inside it, extends the range one more time. Then we trade back through it. Now we're looking for this to go higher. That was the logic there. So again, look at those little tiny areas and say, are you going to pay yourself at that? Is it worth it for you? Or is it just a nice observation to see the rule? panning out. So now I'm looking for higher. Just so you don't think I did want this down here, but as soon as you see that trade back through that level, now I'm thinking higher again, mean threshold. If the mean threshold holds, then we're stuck inside this range from here to here. And we're over 50% already, so see where it goes. You're in this consolidator, not super clean price action, honestly, so let's see what we get. Where are we at here? Gold, I'll get to it in a second. HNC coming all the way back down to a discount. We went to town on cocoa this weekend talking about, there's the sell side hit from last week. Now I want to see this black line here get hit too. On the downside. That's the full downside liquidity, all of this down here. So we expect to see that get taken. Soybeans finally bounced off of the consolidation inside the range, bottom of the fair value gap, pissy. We found support. We're banging off of these two. Finally broke above it. And now we're looking for this premium array above us. If we can get back on top of that, again, looking for these old highs back here. Sugar. We took the low there and there in sugar. And now we've got this change in direction. If we get this body above here on a close in the next hour or so, we're looking for another run back up inside this range. And coffee, got to get above this order block here. Got to get above 387. The close, go higher. Otherwise, still looking for lower prices. Live cattle, we're looking for some support off this level now and start looking for our next 214. Cocoa, this is the one we were playing with a whole bunch there on the weekend. I'll show you how you can, using the principles we talked about on the weekend, you can see how cocoa can trade like any other algorithm. It's running the exact same setups in all these assets. There's nothing that requires any excessive understanding as far as I'm concerned. Just trade the algo. It's clean. Trade it. If it's not, wait. And we were showing you that you could trade it without all that going back and researching the news and figuring all that other stuff out. Nice reversal there in lean hogs. If we can get high above this high here at 88.6 on a close, use this candle for support to go higher, and you're looking for the volume and bounce above you here as a target, and that's pretty much almost there anyway. So you look for a fill all the way up to 932, 93.20, 93.200, I should say. Crude oil, It's already up in the premium level before it gives you the reverse. There's a small little imbalance here. We trade back into it in here and then extend higher. Immediate rebalance. Body's traded above it. Come back inside it. Now you want to see this extend higher. So I'd like to see oil go higher. And I'd like to see oil get up into here. That's going to be our, oh, that is a daily. Look for a run to that box. Got to get a body above here, but it looks so far more bullish than bearish. As long as we can stay above this level here and this level here, then we might have a chance of striking that today or tomorrow. And then see if we can get through that. If we can get through that, look for the relative equal highs above us. And then the next premium array above us is going to be from here to here. Open the door. Open the window. Let him in. All right. So we're back through that level again now. We're looking for sell side again. We're back through this level. See how the body's traded below it, comes back up into it, gives it a tap, continues lower, extends the range, pay yourself at the range. Not that you're taking this trade. I'm just showing you now we're looking for this discount box here. We've hit the discount. Let's see if we can get through this level, get another market structure shift, and then start running back down deeper into this range. We may not get back into this. Just stay in price action. Just stay on the horse, man. Don't get thrown off. Just stay on. Keep your eyes focused on the levels inside the small ranges that you're in. If it trades back out of the range that you're in, then as we showed on the weekend, just keep watching those key levels. This is all Monday's open, so I'd like to see us come back and trigger our little levels here. 830, you can get below 830, come back into it, look for an extension back down to the discount range here. Range has been extended already, so I don't want to see anything more than the mean threshold of that candle get taken. You can come back up and retest this. It's been tested once, so I just want to see it roll over now. Now, where are we at here? Gold. You just need to see it to believe it. Not a reversal, but is a change in direction that gets right here. It's the hourly. We have already a run higher. We break below all the way down to the discount, run back up. You want to see it break this high here and then take this high on a close. It takes it on a close here, but you never get an opportunity to get back in on it. You don't even get an opportunity to get an institutional order flow entry trail. This is that A plus setup I was telling you guys about. When you're looking for an A plus, you want to see it create this busy, open, and just take off. You don't even want to see it come back to this institutional order flow entry drill. But there's not very many people that have that as a trade, where it trades back to the open and then goes. That's the A plus type setup, but that's a lot to have in drawdown if you're not sure if that's obviously going to work. It's easy in hindsight, but so far no reversal, still going higher. It's getting a little sloppy here in the next hours or so. But so far, I don't see a reversal going on here. We have eaten through. We validated this candle and this candle. As long as we have a body that stays above this mean threshold. I don't want to see it getting lower than that. Close if it does neutral until we get a break in structure above or below. But $3,100. They were calling for $3,000 last year. And here you are, $3,100. Upside. Well, I was going to say our upside objective is right here, and our pre-market is already 22.11, so we're like almost $1 higher right here. Oh, let me say goodbye to my honey. All right. All right, all right. So this is good. I like this upside. And then, dare I say, if we can get above this level today, I'm looking for a run back up into this, the big blue, $23. See how that does. Bitcoin. Oh, we had Kamal. We had some fun this weekend, hey? It was fun trading Bitcoin this weekend. Bitcoin is I've got no major opinion other than I would never buy a Bitcoin to own it, but it sure is fun to trade. It gives you some awesome setups, like for longs. It works right back into premium discount arrays. Like, you can't ask for nicer, cleaner setups like this. Like, look at this reversal here, trades back into it. Look for the premium array up here, right there to there. Boom. Get another reversal, market structure shift, trades back into it, takes it lower, reverse, premium array, extends the range, comes back down, trades below it, trades back into it, comes back to the discount range, box to box, box to box, trades through the box, extends the range, reversal, opens, comes back into the box, trades back up to the box to box again. I tell you, it's a beautiful one to trade. If when the algorithm's working nicely, you can actually catch some nice trades. That's a 5-minute chart. So yeah, it's a fun little trader. So where are we at now, you're saying? That's all fine and good, Darren, but where the hell are we at now, you say? If we can get below this level here on a close, look for a retracement back into this level 1, 2, and 3 for continuation on the downside, and we're aiming for a box. Aiming for old highs first, and then you're looking for a little box down here. And this is a 5-minute chart, so we'll put that as a 1 minute. So I'm looking all the way down here. So we'll see if that manifests in the next little while. And obviously the old highs first. Those are the objectives. Pull your fib tool and low to high. You're over 50%. So you've got to get a retracement back above 50% in order to make this somewhat profitable for you. I'll leave that on there. We'll come back to it later. I'd like to see us get back down into this old high here first. We have got an extension above. So if you come back into institutional order flow entry drill, continue going higher, or no more than 50% of the wick. This is that graded response I talked about on the weekend. We're looking for a graded response right here. And we have this was another one we were talking about, Monster Beverage. How you could have made a killing in Monster Beverages back when it was 40 some odd cents. We were having a nice little play here. So let me get rid of this. Walgreens in the 1 hour. Walgreens is in the holding pattern. Mosaic. We're still in holding and Mosaic. I don't want to see it drop below here though. If it does, we start getting down lower. I'm looking for this as the next price leg higher. For this to continue marching up. Where are we at with Disney? Wow, I bet my buddy Russell really appreciates where we got you out of that at a nice high price, hey? A couple of years to hold that? Can you imagine if you're still holding that, Russell? That's crazy. If you were still holding that, you're up at $109. You'd triple your money you got out, and look where it's sitting right now. You would have only been doubling your money at 66 if you bought that at 33. And we're about to open down here at $67. So gang banger. You got out at the perfect time on that one, my friend. Good for you. Money in your pocket, man. After all those years of holding on to it, it sure is good that you got up when you saw it. So anyway, Disney came back, filled the gap, or retested the high of the gap, reversed. A little structure, a little consolidation here. Cam 1, all the way back down to where we had our discount box, a little tiny guy down in here. We hit that, come back, test it, and then we're looking for range extension now. So, and now we're looking for a run back all the way down to the discount box of the larger range. We did not get much higher than that. So again, keeping in mind with Disney, we've got this next ugly price leg we've been talking about as a potential. This will put Disney down in the 80s, right back down to this discount box down here. So you want to see it sweep these lows, take out the discount. The next lowest discount box is going to be this one here to here, and then I'll take the lowest one, which is there. Those are the downside objectives. This is the draw on liquidity for me right now. That's the next rundown. If we can take out that low, come back and use this as support, you're looking for that to run lower. Get yourself a nice little pickup when Disney, you're down at 82 bucks. Yeah, I got a feeling these banks are going to start dropping. They're not going to give us our... this has got its... oh, so we did hit our discount box. Nice. Lovely. Nice reaction off of that. Right at 9:30 open. Box to box, my friends. That's doing it live. That's what we're talking about. Sorry I wasn't on that, but I hope you're watching it. I called it down here, so I was looking to see if where's my trade. I was like, where's my trade? It's not on anymore. And it hit the objective, so that's good. Pay to Disney, banks, TFN. Still looking for this guy to head down. Still looking for this guy to head down. Pick up some Dodge at 8 bucks. That'll give you a nice little dividend there. 73 cents. Every quarter. That's almost a 10%. Or it is a 10%, right? 1, 2, 3. Yeah, that'll be a 10% return on your money. Plus, if you can get on there on dividends on that, that'd be like 10% per quarter if you get it 77 bucks. 734. Yeah, that'd be a nice little return. Not that it's going to pay dividends that long for when it's in that kind of a discount, but once it gets back up into here, and you're looking for, you're getting some good dividends on Dodge, Ford. Anyway, and we were playing with Tesla. Not that we would actually buy Tesla. Oof. It's on a tear. Anyway, let's look at the British pound. We're looking to see if the US dollar continues to roll over now and get down to this discount box down here. We're looking for these relative equal highs above us. This buy side liquidity. Still looking for euro to hit the buy side. Canadian dollar. Look at the crap in Canadian US dollar. Being fixed and held in place. Gotta love a good old trade war, hey? Well, we hit that premium level. Now we're coming back into this discount box here. So you're stuck between here and here right now. Japanese yen, looking for upside gold still. Silver. It's hit perfectly off our box. We've had that place there for weeks now. These were all laid out weeks and weeks ago, so you can see how we're finding levels of support inside these, and there's a level of precision even in silver that is very visible. Okay, so now we're looking for, we're going to E-split. So kind of reactions we getting here now. ETFs, and we got this. All right. So welcome back. All right. Not getting a retest of the high. Obviously, we've got we ran through our discount array on a close. We have not come back to fill it. We've not come back for this one. We've got intentions to get down lower. So I want to see if we get a reverse here now. Let's see if this, how this acts right here. So, you'll have to go into your previous contracts. See what kind of response you get there. This is the next price leg down, looking at 1,700 or 17,000. Let's see where we sit today. Let's say hello to everybody this morning. Who we got here? Kamal, good morning. Russell, hello. Donkey, hello. Joey Sixpack, hello, my friend. Hello. Sandra, good morning. Craig Campione, Abs, I must go, my friend. So, Mr. Morning, have you seen Michael's video where he claims open ranges give you standard deviations where price would find support, resistance, and eventually marked daily lows? Opening ranges. No, I haven't seen that. I've seen his open range, midnight open range, providing I've seen this one where he does open range from here to here and then does his fib projections. But how do you know how many standard deviations there are? 2, 4, 6. That's the opening range one I've heard him using. So if you're using the opening range gap, this is the opening range gap. Four standard deviations puts you here. Yeah, you're way down. Where you got some huge downside already. So I'm good. I'm not very good at deviations, standard deviations anyway. So see how we're just stuck inside that box now, inside the fair value gap. We're just working it. So if this is creating your bear flag, you want to see this give way, close below the mean threshold of this candle, come back, find support at this, and start pushing lower. You sound a little better. I feel a little better, but I can't say I still can't do like blowing kisses. That's still not working there. There still feels a little more flaccid there. This has got some tone. This doesn't have much tone. A little bit of more tone, I suppose. We'll see. I get a few more treatments of acupuncture this week, and we'll see if we can get anywhere with that. So 9:30. Looking for a change in direction. Good morning, Mohammed Shepherd. Good morning. Can you look at corn? Corn. I had corn. I had cotton here. Corn. $4.31 to $4.34 for corn. In around that box there. And if you take that box, look for the lower one. If by chance you get above this level, this consolidation here, use these two candles for support, start pushing higher. You got to get a close above here, and then you're looking for a run higher in corn. I still think it's got more downside yet. Good morning, Ollie. Glad I got out when I did. Yes. Well, that's huge. Fair value realized was on 2 minutes. Good morning, Kevin. 777. Good morning. So appreciate you, sir. Appreciate you too. Chris Alley. Good morning. So is Michael using the first fair value gap? as his the first fair value gap of the day, the Sunday. Like, what's he doing this projection? I'll have to look at that video. I'll look into it. See what I can find. Next price leg down. Um, when it doesn't reach back for 930's fair value gap. Ah, okay. Good morning, Derek. Gonna dock your pay. Late to work. All's good, man. Hope you had a great weekend. This is good. Just want to see this roll over. Again, we don't make decisions inside the moving candle. Wait for it to finish. Make your decision then. So if you did manage to get short up here, where we're talking about running to this discount box here, and you did keep that and wait for your next reversal, you still don't have your reversal yet. No reversal. So you're still in it. I'm 175 away from passing of 150,000 K account. Ooh, good for you. Let's get you there, man. $176. Let's go. Let's get you there. If we can get you there today, Ollie. I did, thanks. Got my swarm box out. Oh, good. Fingers crossed. Some scalp bees. They find it. Honey. Homie. Yes, that'd be awesome, man. I hope you get some honey this year, my friend. We're going to call you the honey badger. Derek the honey badger. Be all you can be, Derek. I like it, man. So we've got a trade above. Come back inside, looking for a range extension. Want to see us get above this candle here now. Sweet. I'm stress-free right now on that one. I caught this right here. So you take that long inside here, look for this candle to provide some support now. Let's go. I'm pulled in tight here now. And it's right on macro time too, hey? So up inside that level, I'm out. If we can get back above that level now, we've got to close here. So I like to see that keep marching higher here. Use this candle. We got all the way down into that box again though. I don't like the mean threshold getting taken. If it's got sensitivity, grade response off of this, you want to see it come back, tap the high of it, and then go or the open or the mean threshold. That's it. I don't want to see it start eating all the way through that. So you want to see that get some legs now and start going higher. Hells yeah, baby. So now we got to break a little market structure shift. If you want to see this come higher till 10 o'clock, reach back into this open range gap. See if we can start running for these highs again. But you got to get above this level here first. Pay yourself at the high. I'm done again there. I want to see it get back into here now. So you see that that's like, you have to decide whether or not you want to get in on something like that, run for your mean threshold, over rejection or over reversal that wasn't validated, now is. Looking for that guy to get touched up there now. Look for the open fair value gap. A nice Judas swing, hey, for 930. Come into that reversal and then end up just booking it back up for the rest of the day. That'll really throw people off. Curry fishbowl. How's Malaysia? Hope you're doing well over there. Hope you guys didn't have any issues with that. I was watching the videos on that earthquake you guys out there. Crazy. We got friends. Our son's wife has, or future wife has, family in Bangkok. I watch those videos of the building shaking back and forth with the people in the infinity pool, and they get off their mattress and you see their mattress go off the top of the roof. Holy crap. And that poor guy that was in that crane, it folds and you see the guy get thrown right out of the crane. It's like, oh, it's terrible. All those years working, then you go to work, who would have thought one day you'd get thrown out of your freaking crane? You never know, man. You never know when it's over. So if you're looking at your internal range liquidity, if you're going from low to high and you're trading this on the fib tool I showed you, the fib tool technique on the weekend, and you got in on your entry down here, right on that perfect little entry I gave you here, 50%, you move to break even, take half your trade off and wait for this. If you get it, great. If not, then you've got a high taken. You've got a reverse happening. So you've got to keep your eyes on this piece right here. And you're looking for box to box. If this closes below here, comes back in, it's box to box. And we're not looking for all that. You're not looking for this. You're just looking to stay on the horse right now. So right now you want to see this stay open and this provide support. Like right there. You want to see that leave and go up from there. You do not want to see it get back below that level. And make your decision on the close. The fact that you're even wicking into that, look for the mean threshold of the last down close, or this mean threshold here. There's a small little imbalances here, but we'll watch, see where that closes. You weren't affected. Well, okay, I'm glad to hear that. Glad to hear that. It's a crazy thing, man. It's a crazy thing. So let's take a look at something here. I want you guys to see this. So now that's in a a rocking environment. We'll go to a stress-free place. So off a long off of here, and now I'm stress-free. As soon as it gets above that high, you should be stress-free anyway. And then move yourself into some profits. And look at the next price leg. Where does it put us? Right above these highs here. So if you're waiting for your next, just wait for the next reversal to close out your long trade if you're long on that. We've hit our box and we've hit the 62%. So watch if this creates a little fair value gap, reverse. So always keep getting ready to mark out your levels. I'm not crying because of my trade, trust me. Done for the day. Great reversal. I'm buried with work today, so I'm out of here. Take care, Darren. Love you all. Take your time. Follow your rules and be patient. Thanks, Chris. Have a great day, man. Have a great, great day. Nice. Good work, Russell. So now you just look for any potential reversal or change in direction here. I want to see this continue to provide support and start marching higher. Oh, you want to see a measure of this fair value gap stay open. This starts to lose its luster for me if we start to close the fair value gap in. So it's kind of like a graded response again. Tap that 50% there. Oh, let me see if it's right. That's the perfect one right there. Right off that level. See that fulfill? Almost a fulfill. Not 100%. Remember, we're talking about greater responses. Ideally, you want to see this fair value gap occur above the high, not below the high. You want to see the let's just come back up into that premium piece there. There's a small fair value gap there. It's tapping it. So we've got to see a structure break here or get above it. So yeah, greater response was the ideally you want to see it just tap like that and leave. Then the mean threshold, then no more than 75%. And it literally came down to just under, didn't quite fill it in. So that's the lowest level bullishness. So all right. And we're just looking for our price leg to finish off, right? This price leg from here to here, we want to see that run to that level above us. I'm looking for the premium. If you're looking for a premium array, I'm looking for just above our midnight open range here. Back to the consolidation if you want. We've now filled this in. We've taken out a little high. Keep your eyes right here. You're getting a reaction off of your initial presentation again. So you see how you hit 62, come back to 50, you close off your trade there. You would have paid yourself there. You're done. If it's a logical level, you can enter in on it, adding to it. As long as it doesn't take out the low, you can add on to that and low 60, 70, and continue moving your stop loss up. That's more advanced ways of knowing what it is specifically you're looking for in terms of time and price. And that's a 5 on our why is this not working? Okay, why is it? Oh, yeah, it's a 1 minute. Why is my little, why they're there? So there's a 5 swing. Get a little tap. Let's go higher. Yeah, non-farm payroll week, man. Monday, Tuesday. That's I'm out of this now. That's all the premium I need out of that. I'm just shy of my daily objective. So I'm good. Now let's see if we can see a reversal here. Higher time frame objectives. Let's look at this. We've come right back up into the 5-minute, filled it. There's a premium array right here. See how we've the first presentation, or sorry, the first presentation's here. It's also right above us as a premium in terms of this larger range. If you're going to go from discount to premium, there's your premium. You've hit it. So now we've dropped below that level. See that? Now we're tapping it. I want to see that come lower now. If we trade back through that on a close, I'm on the wrong side of it. I'm stress-free again. I trade back from here. As soon as it breaks that low, I'm stress-free now. Look at the range you're in. Fair value gap fill. I'm out there. I'm just inside the small range here, right? So again, you have to decide whether you want to trade this super scalping type mentality. There's 62%, right? Come back, take you out at 50. Now, if it starts going higher again, I just nibbled 51 to 20. So I just got almost 23 handles out of that. And I feel I'm on the wrong side of it. It's just the discipline to know that there's your entry, trades below it. You catch the perfect one there. If you're on the wrong side of it, it'll trade through there on a close and then continue going higher. So you can catch that smaller run. You say, well, great, if I'm going to go there, I'll get short and I'll pay myself right in that one candle, 1 minute. I'll pay myself some money, move to the sidelines. Again, you have to be, that may not be your trading style at all, but if that was a daily chart, see how we've traded above this now? I'm expecting that to go higher. And it's super tight, so it's not really what you want to trade if it's not your thing. and it's consolidating. So just move to the sidelines and wait, but just kind of watch how price is acting at this level here. That little imbalance right there, and we're inside the rate first presentation as well. So now we're back below it. So now you go, I'm up, I'm going higher, I'm going lower, going higher, going lower. That's the horse. Stay on the horse. And if you start to see it flipping around, it's trying to throw you off here. So just keep staying on it and riding it and watch how we work. So if we get a market structure shift now on the downside, I like to use this candle here and that little imbalance right there as support to come back down, and I'll be aiming for down here. So now let's see how we've traded through the discount portion right here. Wait and just watch. 9 seconds. Don't make your decision yet. Just wait. We have closed below this level now. You want to see it come back up into there and here. And you want to see it come lower. So right to the bottom of the, if we just retap this first presentation and go extend the range. Or you can just go to make it to here, which is right where we're hitting right now. And then roll over and come back down. That's like a good response right there. Tap and go. That's on a 16, 17. It's a nice little TIBS. As soon as you get range extension, go to break even. Right there. Now go to break even. So I'm at break even plus the cost of the trade. It's paid. Right there. You can't ask for more perfect entry there, guys. I gave that to you on the weekends. Talk to you like that. Talk to you about this on the weekends, and that's it right there with precision. You can't ask for nicer than that. Extend the range, move to break even. You're a stress-free trader right now. And just aim for it down here, or wait for the next reversal, or aim for the next objective. Whatever floats your boat, man. If it comes back and takes you out, who cares? You were stress-free. You made money. You paid for coffee today. You just want to be a bunch of little mice. Eating the cheese, man. Eating the cheese. If the 1 minute's too much for you, donkey, then, you know, that's fine. The purpose of the 1 minute isn't for you to trade on it, though you can, and we obviously are, but what I want to show you on the 1 minute is what you're looking for on a 5 minute, your 15, whatever your minute, whatever trade guy you are. You want to just make sure that you're watching price action on a 1 minute. You don't have to trade it, but watch it, because what's happening here is critical for what you're looking for on these other time frames. You're looking for the same thing. This is just giving you what you're looking for here faster in terms of a demonstration. That's all. So now we've traded below this level. I like to see this candle hold price now and come lower. There's the mean threshold. Come on down. If you trade back through that mean threshold, then I'm looking for a bigger run into here. Yeah, so Donkey, just look at this and say, if this was a 5-minute chart, what am I looking for here specifically? What key levels am I looking for support and resistance on? And that's all you're trying to do, man. Is just study this on a 1 minute, even a 15-second chart. Gives you the same thing, just gives it to you a little quicker, that's all. So I'm back in on that one again as a short off of here. This one came back, got my stop loss. So I'm a short off of there. So ask yourself, where do you want to see price go right now? What do you want to see it aim for? What's the next premium array? Looking back over here, look at this old one that was hit. I'm going to sit there on the sidelines and wait now because we get this this little tapper here. Again, I want to see this get taken on the downside. Then I'd be like, okay, we're good to keep aiming for this discount box down here. Hans, my man. Look at that regular trading hour gap. We came right back to the top of it and then reacted off of it, like right off the top bottom of it. There you go, equal lows now. You know, you can't even pucker your lips, so you just kind of wipe it across my lips. I was trying to suck the coffee off my finger. I just smear it into my mouth. That's funny. Oh, I found that funny for some reason. Like I can't suck on that. Just push it into my lips. Ah. I tell you, it's really kind of, you find out just how important your face is. See that level? That's why I got out of there. That level can provide a level of support. And if you look at the range that we're in overall, from low to high, right off 50%, right? So I want to see, is this going to hold price now? So if you're trading short on here and you're using your fib tool, and you're aiming for the discount array, you pay yourself at 50%, take half your trade off, you've taken out a low, and now you move your stop loss, which we got into originally up here, for move it down a little further, right? Let's see this get to 62. So I just want you to show, I want to show you how you can kind of manage that trade from there. Or even if you said, you know what, I'm going to wait for market structure shift, Darren, and then I'll take it. So I'm still in the premium. I'm aiming for a discount. So you say, okay, you wait for this candle to get taken on the downside on a close, which is right here. You trade back into it right here. So you're short right there. And now you're saying to yourself, I want to see that hit 50%. As soon as it hits 50%, move your stop loss to break even plus the cost of the trade. Take half your trade off right here. Okay. And I gave you that one and that one. So we'll just assume that if you are in this, this is how one way you can manage it. And for those of you who want a more advanced way of managing it, you can go box to box. If you want another way of managing it and you want this box to see if this box just lets go, I'm looking for any reversal in here. So if you trade as your initial entry from entry to the next reversal that you find, then as soon as that reversal is validated, entered, you close your short and then enter in on a long back in the new range. Let's just try that. We'll just assume that's a trading theory, and we'll see if that manifests. So 2 levels. I'll do all 3 of them together so you can get an idea. So here's kind of like the first idea that we're talking about. Our stop loss right now, where we entered right off that level there, is cost of the trade plus some. We've taken half our trade off here. Okay. So as soon as it hits 62%, we'll move this stop loss. You pay yourself another 10% here, and you move your stop loss to 50. So now the rest of your trade, you're stress-free anyway. So you're stress-free here. You paid yourself here. And if this reverses now and goes back higher, you'll be glad you paid yourself. So I think we closed below 19,000 today. Like, I'm already believing we're looking for 17,000. Not today, obviously, but I'm already believing that we're our next price leg has already begun. It's just scary, man, because that's a big drop in the market. That's like another 3,000 points, which is not the typical run I was hoping for at the end of the new or the spring season, entering into spring, that is. So keep your eyes right here. We're going to move this stop loss to here, and we haven't, and the method number 2 is we have not seen a reversal yet. So we're still going short. The reversal for us, unfortunately, if this just starts to motor through all of this, it's going to take your stop loss. The real reversal is until you get it back above here and that order block. So unfortunately, if we're entering in on this as a long, we still want, you're going to manage this with your fib tool until you see a reversal. There. See how that 50 held? You just got a little dip in here. You didn't get your 62. Stop losses right here. You got half your trade off already, and we're about to see if we got hit. Wait and see. Look how close we are. Leave it there. That's it. I want to see that start coming down now. Get on down. All right. You see what's happening there? Do you see what's happening? What do you see happening? See that little fair value gap formed? We took out this little tiny high right here, this little swing high, came back, tapped the top of this order block here. There is a tiny imbalance in here. I'm just seeing it now. You see it? Your little swing reversal. And yes, I'm not trying to form fit this. I told you this, guys, on the weekend. There's the first one. If we run through it with one candle that takes out 1 and 2, you always take the second one. It did not take out that one. So on a close, not the wick, and then we see this, retrace right back into it. Tap it, leave that open. This is the institutional order flow entry drill. Created response you hear, and now you're going higher. That's as precise, and that's the kind of thing you see. This little tiny response there takes out that candle. A little tiny swing. You may not look at that as important, but clearly it is. So you have to see it. You have to keep your eyes on that. And that may be, you may go, oh, that's crazy. And you may need a 5-minute chart to find something like that. But right now you're inside this 5-minute one, back and forth. You've come down to the discount array. You want to see that start pushing higher and take these highs out now. If you're going from box to box, here's your box. Right here, your premium array. You're just coming into it now. Now you want to see if this premium array next, so box to box, gets traded above. Then you're looking for range extension. And then again, another run higher. And if that's your price leg, then it's not much higher. So watch here. Watch this order block here. Want to close. Tap, go. Right there. Now you want to see that go higher. I don't want to see it get back through this level. Mean threshold. Second one. Just hit rejection block. Watch to see where that closes now. $19,000 in 6 months. I've always found it to be such a great strength of confidence when someone can make fun of himself, herself, and share it with others. Thanks, Darren, for that. Oh, you gotta laugh, man. You gotta laugh at yourself. I remember this. I looked at my face this morning and I remember this joke, and I'm going to tell you this joke. And I'll be the character that's in of the joke, because you got to make fun of yourself. You got to laugh at this stuff. There's this guy. There's a village, and all these people are gathered around this body that's on the ground, and they're like, "Oh my goodness! Oh my goodness! What happened? What happened?" And they're looking at this body, and more villagers are gathering around, and they're saying, "What happened? What happened?" And they look down at this guy's face, and his face is all mashed on one side, and they're like, "Oh my God, you know who that is? That's the toll keeper, the bell ringer." Because he used to go to work and he used to go bong, bong, bong. And he used to bang into the bell to ring it. He was the little Quasimodo type guy. They're like, "Are you sure? Are you sure?" You say, I'm not sure, but his face sure rings a bell." I don't know. It's probably not the way it's supposed to come out, but I saw myself in the mirror today and I was like, "You look like the guy who rang the bell." "What was your job?" "I was the bell ringer." So look at this order block here. You've got premium. Let's see if we get, now you look at this range here. Instant, we have a immediate rebalance, trade below it. Now we're back inside this range. So there's nothing to trade off of here. You're just looking at this 50% back to this. Well, forget that thing. That's not a significant level we were looking for. That was just where we moved our stop loss to. So now you've got a little pop above the high. We've got immediate rebalance. So if we come back and tap right here, right there on that 38 candle, this is Crazy Ivan. If he sees you, he's coming for you. So this is the Crazy Ivan look back from 1030. Crazy Ivan look back. 38's the one that you decide. And now he's going to either shoot higher, and we're right back into this order block, or start coming back down lower inside this range. So there's 50%. Close, a complete close would be 105. We're not quite there yet, so I'd like to see that actually go higher now. Hans, don't we have a bullish breaker on 36 a.m.? What's this 36 a.m.? I'm not sure I get what you're saying there, Hans. A lot of people can't do that. Not sure Michael can. That was hilarious. Hi, Simo. Good to see you, man. ES is way deeper into the regular trading hour gap. Let's go, man. Let's get up in there. Let's get on up. Get on up in there. Let's head back to that new week opening gap, shall we? Give us a new week opening gap. Come on, I want to see Hans say, look, it's close again. 25.50. There's the graded response in your new week opening gap. 1, 2, 3, and the final. Not quite giving us a lift we're looking for just yet. 62%. Where does this want to come back to? We've traded through this level now. On a wick. One more second. Look at that, right on it. And going lower. What do we got for a discount? We got a little bissy down here. %70 off from trade entry reversal. Looking for the next macro to begin. Fill of this, nice. See if we can start getting a move forward now. There's your 62%. So if you were on this trade for a continuation, again, 50, 62%, it's just come back and taking you out there at 50. That's where you moved your stop. So if you're in on that short from here, on that immediate rebalance for a run down to 50%, you got that already. Now you're in this, start climbing out of there. You got a fair value gap here that's formed. So now I start looking for things like this. And you want to see it break through here, take out this level, and you can get back in sync with premium or discount to premium. And you want to see it get above here. Look at the candle to the left. The order block to the left, I mean the bullish order block to the left that initiates the fair value gap or the run for the low, the breaker. And then look for that to clear it and use the breaker for a continuation. And then you're just looking inside this small range here. If you don't get that, if all you do is just come back inside this level, like you trade down, come back inside it to the consequent encroachment, roll over and come back down, I'm looking for down in here. That little tiny imbalance we had down there still, watch that one get retapped. Right there. We either have to get above here or break this, aim for here. The 936 low, high, low. The 936, low, high, low, 936, low, high, low. What are you looking for there, Hans? Don't we have a bullish breaker? This is a bullish breaker. Yep. You've retreated back into the bullish breaker. That's what we were cautious of earlier when we were talking about it returning back into that level. So you're looking for the breaker, and then now you're looking for this next breaker. If we can get back above there, which is what we're looking for, and this candle here, here's the next breaker that takes out this little low right here. And now you want to see a continuation on the upside. You want to see this get taken here. Watch for a retracement back into here, this order block, and that fair value gap. It's job time. Now I want to see it just start to move out of here. Take all these little highs above you here. Right. Next macro is about to begin. So again, stay on the horse. Just watch where we're at right now. Right now it's bullish. I want to get a body above here though. And we're at the premium array already, so let her buck. It's got to get up there. Wait for structure break. Find support at this and start moving higher. So now we have a body above this level, tap, and let's see it leave here now. There you go. Let's get out of Dodge. Got lots of equal highs there now. I don't want to see half that wick get taken. We're right back into this discount box again. As soon as it starts trading through that level, I don't like the mean threshold. That's done. Looking for a low here now. If we take this low here, we'll come back into this range. And there's nothing else for you down here except that little tiny imbalance we looked at. We want to go above first fair value gap on the 1 minute. Yeah, you want to get above that for sure. Let's go. Let's get some push. Little swing, reverse, close above it, and just keep marching higher. And a 1 to the 3 to the 4. Now he closed above it. Tap it. It's hanging around inside there right now. Premium, discount. You're just sitting right up in the premium of the discount premium of that range. That's crazy. It's literally going from bottom to top inside that range, or inside that little fair value gap there. Gotta wait for it to get out of here. That horse is rabid right now. It's just spinning around. See, we've got no real drive to get out of here right now. So even though we've got equal highs above us, we're starting to work this wick. I don't even want to see that get any lower than that last little spot right there. I didn't want to even see a wick get down into there. So just staying on the horse, looking at this price action right now. Every single candle, I'm looking for very specific spots to see it hold. And if it starts to get all wicky like this, and it's not just hitting it clean, like you want to see, if it was going to come above this level right here, see how it traded out? You want to see it come back, tap it and go, or here, graded response again, all the way down to the bottom of it, and then tap it and go. Leave this portion open. See how it ran all the way back, filled it, came all the way back through the mean threshold of that candle and went just a little bit lower. We dug into this level down here again. So you really want to see it getting some legs, get out of here now. Let's wait and see. Good morning, Mags. There was a couple of nice little trades in here this morning, but it's recently got a little sloppy on us. Take the high right there. Now wait. We want to see a high get taken here. I've been sitting in this freaking thing for, there we go. So I want a fair value gap forming here now. So not just watch. Let's just say this is what we want to see. There's a little, we've got a body above this level. You want to see it tap it and go. So there's a little tap and go. That would be a nice little tap and go right now. Pay yourself right there. As soon as it gets to that high, pay yourself. And you just got yourself 161 to 170. You got 14 handles. It's a quick one. Discipline. As soon as you see that high taken, the next high that's taken, pay yourself, move to break even. Now you're a stress-free trader. I know you may go look at that. That's ridiculous. Who's trading that kind of crazy ass lifestyle? Now, second one, tap here. Right off our premium box here. Give it a little kiss. And give us a little run. Go on, get on up there. Graded response. See, again, we want this fair value gap above that level, but I'll take this. It's a nice quick grade. Now go, go, go. And it's a O2 candle, so it should make a new high. There you go. Now, if this doesn't, if that holds the high now, I'm going to wait. I'll wait for a 7, 9, 10 turn. And here's that level. If we can get an institutional order flow entry drill. So that little one you saw there run above that high, pay yourself. It's a 2 candle. We can come back into this level. We still haven't tapped that box again. So there's the tap of the box. Nice. Now you want to see if you can get some sort of reaction out of here. Right there. And we're at a 3, 2, 3, 2, 4, 3, 5. I'm not going to trade this. I'm just going to watch this now, just because I want to see how this manifests. So there's the tap off of it. So you can remember we've taken out a high now, and you've got this fair value gap forming here. So you've got one that wants to go lower now, if we close below here, and this one that wants to support it to go higher. So you're coming back to these equal lows here. You're filled that fair value gap in. So in terms of a greater response, we're not really getting the ideal institutional order flow entry drill we're looking for. We wanted to see it just come down, tap this and leave. Fair value gap, consequent encroachment and leave. 75% leave, don't fill it, or fill it and leave, and that's it. You don't want to see it go any lower than that now. It's got to get out of there. Otherwise, coming back in here and engaging this low again is not, I'm not interested in that. Half the wick now. Do your thing, get out of there. Otherwise, no fly zone for me. No good. See, it starts to lose its luster. As soon as it starts coming back down, there you go. No, don't like that. You want to see it tap this and with intention, get out of here. When that opened, you want to see it start eating through the mean threshold of this candle and start pushing higher. The fact that it's starting to come back, we've got this reverse forming here. So you got to be prepared for it. Is this a support level or is this a reverse level? Wait for it to close. Right now, this level is still holding price, and we do not have a body that traded below this level yet. Let's get through the mean threshold here. And you're looking for each candle and how each candle is now validated, when it's validated. This is like being really picky about each candle. If you want to stay focused on the array, see how the mean threshold's holding price right there? Off the inversion. You want to see mean threshold just get blasted through, and this is a 7 candle, so we should start seeing this run now. It's got a new high. Keep coming. I want to see it get above 2. There you go. Done and done. Pay yourself right there. From there to there, 52, that's 26 handles. If you're into nibbling a little bit of handles here and there you go. And you don't want to see this all the way back down here again. That's like an immediate rebalance on that candle right to the very bottom. So come up, immediately rebalance. So now you've got 9-10 turn. I'd like to see a 9-10 turn in here now. And again, you're not really trading this because this is sloppy price action, but we're just trying to stay on the horse. I'm just trying to read each candle and what we're expected to see. Here, 9-10 turn. Give me a little swing point here. Create a new little swing low. There's your swing low, or there's the low anyway. Back inside this discount box. Right to the bottom. Now I want to see 10 start turning here, or if 9-10 keeps coming lower, I want to see if it gets through this box here. This is TIBS, in case you're wondering what I'm talking about. It's a good idea to start scaling out just because of this choppiness in here, Hans. I wouldn't wait to 50%. I'd start scaling out above a high. I'd start scaling out when you get through these little inversions here, or these little SIBIs, and this 25%, 50%. I'd start grading it out there. So there's the 9-10 turn. Right in the level we're expecting. There's your fair value gap. Watch my TIBS video. You'll see how TIBS is a universal discovery. It's an algorithmic discovery. Now, if you expected that 9-10 turn, like exactly what we were calling for, you could 131 all the way back into this order blocks, low, open, and mean threshold. And we have a 9-10. We got the squabblers going now. We got the morning squabblers and 9, 10, 11, and 12. 9, 10, 11. You want 12 to get up here. You want to see a nice little right here. Stop right there. What time is it, folks? 11 o'clock. Watch your run on here. It's going to go lower. Get out. Don't get suckered in. He ain't going lower, higher yet. Retap on the 11. Look for a run back down into here now. I want to see if we can get back into this discount box in here. We've hit this one. I want to see if this one gets tapped now. If we get above the mean threshold of this candle, then we are still going higher. Nine, 10, 11, 12 mean threshold right there. Boot, scoot, and boogie. 11 o'clock. Get right back into our regular trading midnight open range again. Look at how it banged right off of that 8:30 candle. If a D was in here right now, he'd be all over that. He was returning to his 8:30 candle off a swing. If you can catch this swing right here this morning, catch that for a long, back to 8:30, you finally got it. That's a lot to endure though. Mean thresholds holding price. And we still come lower. You see? Now we've hit the discount box. Now we're back into smash around time. And again, you don't have to trade this. You just have to understand each candle and where you expect to see price reacting off of. And now you're starting to see specific times and price to react. So the next minute, this one right here, I expect to see something happening right here in terms of the swing point. There's the new low. There's the consequent encroachment. We've now taken out this low. Now this, if this becomes a fair value gap, it becomes important in terms of internal range. And unfortunately, it's literally overlapping the edge of the premium. Those two, we're back and forth inside those two again. And the opening range, or the first presentation fair value gap. See that? We've been bashing around inside it, and we're augmented by these other little premium and discount arrays inside a smaller range that encompasses this. So 11 o'clock, my friends, 11 o'clock. Look for a rundown into that 10:30. That's why I said don't touch it unless we close above here. Don't touch it for long yet, because we got a level of retracement. So what I'm looking for now is between 11, 11:30, and 1, we could take a run on this low again before going back higher. Or that's it. I don't think it's done there yet though. I'd like to see us take these equal highs out up here for lunch, but I want to see us dip down here on this little measure of retracement between 9:30 and 11. You want to see a 50 to 62% retracement on that. I'll put this whole box in here. And this isn't 100% all the time, but look, watch this premium box here. You've got to get above that premium box on a close, and then that mean threshold has to give way. And right now we've just worked below it. We try to wick through it, bang off the breaker, back down, or this mean threshold. Well, I guess it's a breaker now because it took that low and that low. So watch right here. We got into that discount box to box. You're back in there. Now you want to see if this box holds, and then eat through that. And that is all you get. Then you look for 11 or 12 o'clock to go higher yet. So this is 50% of the range this morning from the 9:30 or from the low to where we are at 11 o'clock. Closed above it right there. First indication wants to go higher. Give it a little kiss. Leave it open. Just come down, touch that right there. No, you want to leave this open. Mean threshold. There you go. Just give it a little kiss right there off the top. And you want to keep going higher now. I don't want to see this fill in. If it does, look for high, open, low. We've got a low taken here. This is the new swing. So now I'm going to ignore this one for now and just go to right here. Right there. Let's open this up, make it a little bigger so you get an idea what we're looking at. Right there. And it's on a 17 candle, 16. There's the afternoon squabblers, the 16, 17, 18 candle. So 18 turns on 17. 17 usually turns on 16 or makes a swing high or low. It made a swing high. It's created this return back into a discount area here. 16, 17 candle coming back into that level. 18 does a reverse off of the 17 typically. So I want to see that just start taking that high and aim for that mean threshold inside this range. Where are you right now? So again, pulling your fib tool from low to high if you're using this method. You go from here to here. So if you got discount, which was right here, you bought long there. As soon as you hit 50%, pay yourself. Hit 62, move to 50, pay yourself. Comes back, takes you out. Good enough. Start the whole trade over again. Pay yourself again. 50%, move your stop loss to break even, take half off, 60%. And if it comes back and touches 60 or 50% again, you've just paid yourself there. So this is twice now. You're inside the same range. Buy, get taken out. Buy, get taken out. Now, if this comes back here, you'd be taken out a second time. Again, 2 stress-free trades. There. Now you move to 62%. You just tap 70. You move to 62. Take 10% off there. Wait. If that runs to 75, take another chunk off there and move it to 50 or 75 here. Sorry, 70. So watch right there. This is the 19 candle. You take your stop loss. Not quite there yet. You're at 62 still. You've paid yourself there. Bang, you're out. And what did it bounce off of? Consequent that mean threshold again. You're out of that trade altogether now. So you've had 2 trades, 2 runs at that, and now you're moving on the sidelines and you wait. Quick, easy way to look at using a fib tool to enter quickly and then get to break even real quick and pay yourself real quick inside tight little ranges like that. That's a so the next candle we should see a swing point. It's 2021 here. This could run right back down into this range again and back down into here. That mean threshold is the line in the sand. There is no premium array above us other than this last little premium piece inside here. You want to see if that holds. It seems like it's not in a rush to take them highs. Gonna sleep now. Bye there. See you later, Carrie. You're probably gone already. I'm practicing holding positions longer. My stop is at break even. Good for you, Hans. This is high resistance, so I'm sidelined. That's good decision, Ollie. It's always good to be deciding when you are decidedly out of the markets, and this is definitely high resistance. So there's the 21. There's relative equal highs at 237 and 273. Oh yeah. But it may slowly grind its way up there. But if you really want to study that and look for specifics and you want to stay on the horse. Now, where are we looking for? I'm looking for the 6 a.m. candle above us. And there's your 6 a.m. candle. Just shy of it. About to hit it now. Bink. There you go. Now you're hit it. Now if we can get through 6 a.m., use 6 a.m. as support. Now I want to see that start pushing higher still. So look at that 237 you were just mentioning there, Hans, or Ollie, 237 to 273. Again, reversal. Again, you don't have to trade it, but watch it. See how we traded back into the discount box, the very low discount box right here? Then we created another reversal. We talked about this. You can enter in any one of those spots, high, medium, or low. You didn't quite get the low. Right on a key number, 16, 17, 18. And TIBS, time, price, how TIBS can give you precision like you would not believe. And then you're looking for, once you enter into this and close out above this candle, then you go, ooh, now if I can get above this mean threshold, which you do right here, now I want to see that high get taken. And now you move to break even. As soon as that high is taken, pay yourself. And now you just wait for the next reversal. Just wait for the next reversal. So there's 233. So what did you call for 237, 273? This is the approaching the bottom of the hour now, 27 candle. I heard a guy, ICT Trader, say that no consolidation ever gives a reversal. No consolidation ever gives a reversal. Interesting. Off the 6 a.m. again. Does that mean like if you have a bear flag consolidation? So we have this rundown bear flag, that bear flags never fail. It's like saying bear flags never fail. right? So you have consolidation, never gives a reversal. Consolidation after our big rundown. Let's say we have this as a consolidation, not that it is, but if we have this big bear flag consolidation, it's like saying they never give reversals. So you never get a reversal back into this situation here, which I don't know by definition what you're trying to describe there is truth or not. Watch this reverse here. Body trades below it. Come back into it. Give it a little kiss. Now you want to see that go lower. I'm stress-free in this one, short right here. Again, you got to believe in it or not. Come back to an old high. Bottom of the hour. Remember, 27. There's 27. Watch TIBS. I'll give it to you all in TIBS. This is just application of what that video shows you. So we have premium discount down here. And we've got this sucker that was giving us trouble. And you also have that regular trading hour gap again. Relative equal lows. You'd like to see a lunchtime take a run on these lows. That's what I would like to see. And remember this little fella back here? Do you remember that? I just want y'all to remember that, just so you can say, God damn, he was right. That little sucker is used over and over and over again. Okay? Just don't forget our little friend back there. See a run on these lows now. Crazy Ivan time. Crazy Ivan. Yeah, I had similar thoughts. He didn't define it, but I thought it definitely made sense. Interesting reversal light area as ES took highs into new week opening gap. I'm not in a contract. Oh, am I in that? Oh, that's right. I think we were demonstrating this with the. This is contracts. These aren't. I'd like to see us hit this new week opening gap for today for upside. This is the June contract for. We've taken out these highs here. Now, if we get a close above here on a hourly chart and use this as consolidation as support to go higher, I look for a run back into this range, into that fair value gap, and this first presentation here, or this first new week opening gap. We're just about to hit it again. Sure kicked off that mean threshold. This would be nice to see this run all the way back up into this order blocks. Oh, we just hit it already. We'll see if we still get a bigger dig into this one here. Start really pushing higher. Let's have a look at these guys. I hit our key level here. Opened. Looking for downside copper. It's just doing nothing. Upside, still haven't hit that. Gold. I'm not sure. I'll have to look at gold, see if we put anything out there in the charts. Downside here. Corn, still looking for downside on corn. We're still looking for the sell side here. Buy side support. I wanted to see the sticks get hit, but I think we might be just rolling over here to take out these highs, get back into this, and then roll down, take the low. Sugar, still looking for the sticks down below. So if we're just tacking back into here now, you don't want to see come any lower than that. If you're going to go higher, you got to start running up from here. I want to see that stay open. Banging around. hanging around. Oil, that is our upside objective. We hit our upside objective. Yeah. Look at that. As choppy as it is. Okay, let's have a look at oil here and see where we put our initial first presentation. This is your oil reversal at 9:30. So here's 9:30. We're going into the bottom of the hour at 9:45. So this is the 9:10 turn on the hourly. Yes, TIBS is used on the hourly, minutes. Wait for order block to get traded above. So here's all the different levels you got to look for. And unfortunately, you did not get in on that if you looked at it following by the rule. So the rule is if we have a low taken, we have a reversal, body trades above. If we come back into it, we're touching that, we're going for a high. It did not give you an opportunity to get in on that. So you wait for this level to get taken. It takes it on a close. If we can come back and tap it, great. If it takes this one on a close, then we look for a return to here. And if it takes that on a close, we look for that one. Takes that on a close. It still does not come back and give you a chance to get in and still leaves. Then you look for fair value gap occurring above it right here. You look for institutional order flow entry drill. We're looking for that graded response we talk about. And there's your institutional order flow entry drill for $70 and the run to 71.18. Just following it rule by rule. Okay. Gold. Little tiny imbalance. Look at that sucker right there. Come back, tap it. Look at that retracement back into this range. At that point, right into 62%. Now we're climbing higher. Crazy reversal in there, hey? And what did it do? It came back into the consequent encroachment of this. Bissy did not fill it. Snapped off of it. That's the kind of snap off response you want. Takes the high by yourself. Now, whether or not that could be your own separate little entry drill. Well, you may be a fair value gap enter. So as soon as it retraces back into 50% of a range or 62%, you may look at that as your entry, the style. You may be looking at this as open, or the high, the high, the mean threshold, and the low of the fair value gap as entry points, and stop loss just sitting down below the mean threshold of this order block here. And you don't want to see a fill. You got, well, whatever rules you want to base around that. That's gold. Geez, they opened up nice and high and then just plummeted right back to where it was. Eek. filling this in. Let's see that stay open some degree. Bitcoin. Look at that, kick off that level. Trade above it, come back into it. Perfect little entry for a long, right off the order block. Run higher, support. We have no reversal going on just yet, so Bitcoin's still going higher. So here's another example of what we're talking about this morning. Here, traded below it, range extension, traded back above it, trade back below it, range extension, trade back above it. We have a fair value gap right here. This is the one you're looking for. Lows taken, fair value gap here. This is why Bitcoin can be so much fun to trade. Old highs, right? We trade through it on a close, come back, give it a kiss right off the regular trading hour gap, and then go higher. So you got confluence, two confluences of support on a 5-minute chart. Higher prices, aiming for premium level right here. So in that wick, you would have tapped it, ran all the way back up, hit it, retrace back down and stop right here. So you would have hit perfect entry, perfect exit inside there, and that would have been 82,400 to 82,700. So $300 run in terms of handles or whatever you want to call those. And then if you're aiming for old highs, you finally hit your high, reverse, change in direction, trades back above you again. You're on the wrong side of it. If you thought this was going short, it traded through you and we're like, ooh, my stop loss has to sit up here. If I can get back in on this and offload my position at break even right there, I can get long. Reverse, you traded through it, come back, find support at it. You have to say, my stop loss is going to get taken, or I wait for the reverse back into this level to get my trade off, move to the sidelines and wait, or reverse it and go long. And if it trades below that level again, you wait for market structure shift. Again, you have to have the discipline to be able to withstand that candle, and that's the sight candle. If you're watching that climb through your level here, all the way up, you think, oh, it's going to take my stop. It stops, then comes all the way back and says, I'll give you one opportunity to get your trade off before I take that high. If there's another one you want me to look at other than Monster Energy Drink, you just let me know. Lows are taken, no. Lows are taken. Still want to see this. I still want to see that. I don't care about Tesla. Let's go. Let's go, Hans. Let's get this done, man. Yeah, right there. You see how we've got that reversal on a 5-minute? Who's Ali? Good call, Ali. Good eye, man. Well done. There's a reversal right there. Finally, we work through it, come back, give it a kiss, and now we're starting to run higher. So, yeah, well done, man. There's another one right here. If you incorporated that whole thing, even all the way up to here on the 5-minute, all of those are downside candles. Down, down, down. Nice tap. Way you go. This is one of the slow, insidious, grinding moves up higher. This candle here, you want to see it, just tap it and go. Nice taken on the 5. There's the tap. Want to see that march higher now? This is just a slow grind. You want to see, just tap this and start leaving, not this whole, just wick up there and come back down. It's like sluggish. You caught the lion's share of the run this morning. Hopefully if you caught that. And then this run up this morning, if you caught that right here and just let it sit there and just grind away, you're slowly getting your comeuppance, your just up, grind, tap it, slowly keep moving forward. So the algorithm's like slowly unwinding and just slowly kind of moving itself up the ranks here. There's the 4 a.m. Come on, get up there. I think it's losing its love for me, you guys. I'm I'm losing my passion for the day here. Still looking for that grind up to 273. That I think this new week opening gap. If we can slowly grind our way up there, looking for that today. We'll see if we get there. I don't want to see structure break here. This is 12, getting into 12 o'clock now. So I'm expecting to see a change in direction here. 4 o'clock hit. Let's go. Let's get on down there. Well, watch here, traded below it, low taken. We could be looking going higher. I'm kind of stuck in between these immediate rebalances and this level here. I want to see if we've taken out that low with a wick. We've created this change in direction. We've traded above it on a close. So the ideal spot, if you're wrong, would be right here to go long. If it trades through, it comes back to it before extending the range, then it's a See what I mean? Retrace back into it, go higher. I'm at break even now. As soon as it takes that high, break even, just because it's shitty price action right now. I don't want to see it, I want to see it just get the hell out of here and use this. Ideally, I want to see that just push straight through here, create a fair value gap above us here, come back, use that as a little tippy tap, and go long. Like that. Just tap it and get out of there. Create a little fair value gap there. That got me. Trying to get these little places where you can find this little launch point at a perfect place to just let it go, and it just keeps coming back, and you got to get into that. As soon as it takes that high out, because they're small little ranges, as soon as it takes that out, you've got to make sure you get yourself to break even. And then if you want it to leave, but it's not, it's so lethargic and back and forth that we've tagged that high here now. I want to see that just start marching higher again. And I think that's going to be it from me, you guys. It's just lunch hours where you're looking to give your money back if you're not careful. 12 o'clock, you want to see a reversal occurring here. and that's 1202. So I like to see this start coming lower now. And see if that transpires. At least back into this range. Anyway, that's it for me. I'm gonna see you guys tomorrow. I'm gonna go do some painting, find some entertainment, and my face is starting to cramp up a bit anyway. So I will see you guys tomorrow bright and early. Thanks again for tuning in. If you're new to our channel, please subscribe and hit the like button if you enjoy what we're doing here today. I enjoy being in the charts with you guys every morning, just sitting here, stay in price action, and look for some joy, look for some, if it's not giving you the price action you're looking for, stay out of it, man. Don't participate in something that's just going to mess you around. This is high resistance. So unless you're just using this as a price action study, this is not a place to be engaging in the market. So just so you know. Yeah, anyway, so I will see you guys tomorrow. Thanks again for tuning in, and God bless. Take care.